weekly week look. Today is Friday, 6th of January, first Friday week in the new year. Happy New Year. And we're looking at the May 2017 UK wheat chart. And as usual, we'll start with the yearly chart, which we've got in front of us. And you can see here that obviously we're knocking on the door this previous high here of last year, 144. Last night closed 143.50. Obviously indicated this is been support here back in 2012, is now hitting head-on resistance at the moment. Are we going to break through? Obviously, if we do, we've got our first target up here, which would be the 60 SMA, 151 to 150. On the stochastics, we're heavily overbought, but obviously we're getting close to a sell signal, but nothing at the moment. So we're pointing to a short-term upwards trend that we've always been looking on this long-term chart with a falling longer term. So are we going to win with the shorter term one against the longer term falling? Let's go down and have a look in the lower time frames. Monthly chart here. Obviously, you see this green candle here forming. This last month's relatively small candle here, and obviously this was November's falling back here. Nothing suggests that we're not still in a rise at the present moment. Testing this high here of last year, you can see on here quite clearly. Pop down in the weekly above all moving averages. Obviously indicating the swing high here. Obviously a bit of flattening out on the short term one. We've got a green weekly candle here, obviously preceding this uncertain candle of last month. Obviously let's pop down into, and you can see here on this daily here what I've drawn is two channel lines here, and a high one above at 144, which is in line with on that yearly chart we start with, and obviously this is acting as support here. This swing high here was 138, got test broken through here, come and retested. We came up and tested 144, came down, acted as support here, was tested here, acted as support again. We broke up through it, and now we're up here going to test these highs. On this chart, we identified that the 60 moving average gives us the longer term trend, and that's still going up at the present moment. Obviously, what we've seen here during the Christmas period was a crossing of the 30-day moving average crossing through the 60. This is similar to what we saw back in the end of October here, and exactly the same here. We crossed under, but at the same time, we had the shorter term SMA 10 crossing through the 30, which then proceeded with giving us this rise here up 144, so £10 a tonne. So at the moment we are going with the crossing of the 10 and 30, and obviously we got confirmation of that because we're breaking through a prevalent high 142, but obviously it's all about this 144. If we break it and we see a close above it, then obviously we stand a good chance of going up that £10 a tonne to test 150. But obviously if we fail here, then obviously this indicates that this is a true range, and obviously what we've seen here is a consolidation during this this would be October, November, December, and we fall back into sort of a range trading before we have a next move. Obviously on the stochastic here, I just mentioned that we have got a high overbought, and obviously to mention here on the volume and with the open interest, you can see how the volume has dived off, and it's usual that during these quiet times, a small volume can move the market. You can end up with false signals. If we go back and think that we've done our analysis of the last 5 years, and that's always been a falling month in January. This is reversing this trend. Have we got the legs to hold it? The 44 will tell us the answer. Obviously, we've got to wait, and I'll put an update this time next week. Thanks for watching.